This is just something that I was taking a look at earlier with the Dow Jones Industrial Average, and as you see, I'm putting it into a log scale so we can actually see what's going on. But I'm looking at the quarterly chart with the 14-day RSI plotted against it. Now, what I'm really noticing is that there are some pretty definitive trend channels that we can see in these averages. Like, for instance, let's see if this one works. You can already see that I drew a couple. Yeah, we have a channel right there. We have channels right here. Channels going up and down through here. And so I'm looking at this and saying, okay, so I'm obviously seeing that even when the channel is going down, markets can still go up. And when the channel goes up, markets go up, as we can see. Of course, as the channel is going down, markets move a little less up and a bit more, sideways. So I'm thinking at this point, like, let's take a look at this in terms of macro trends. So let's see, 35 to 55, or we'll say 32 to 55, all basically a part of a major uptrend. How many years is that? That's about it's about 28, and this is about 28. This is about 28. Okay, so let's do a little math. What's 28 plus 28? And that equals about, what is it, 56? So 56 years. What is 56 years mean? That is the entire length of the K wave, or apologies for spelling, Kondrativ wave, which measures major fluctuations in markets and powers and economies. Okay, so 28, that's a half cycle. So that means that we can take a look at this and say we from 1932 to about 1955, that was the up half cycle, where there was also very high real GDP growth and earnings growth. If you actually look at a chart, you can actually see that. And over here you say, at this point, even though it was slightly longer, that was the down wave of the K wave. And then once again, same exact thing, about 28 years, that was the up part of the K wave, and we are down in the K wave right now. So what does this mean for further implications? First, as far as cyclical analysis goes, that means, let's see, the K wave topped out in 1998. That means that market's going to probably keep going sideways / down for a while. So we got a little bit of trouble ahead of us. So 2000 and perhaps 2025 is when we'll see this corrective movement, even though up, be finished. Other things we can do with this. As you see, there's a channel right here, and while divergence analysis really isn't that good since it's always going up in this chart, what we can do is project future support and resistance lines. So we see there's a touch there, and it rarely breaks before the 28 year. So that means that we can look right here and say it's about to touch this. About how much longer will it take? Let's see, if it stays at the same level, it will take about till mid-2012. But according to my analysis, I think that a bear market's going to start in, I think it's going to start in mid-2012. I think there's going to be a peak in stocks. And as you can see, take a look. The top down in 2007, we had the bear market. Top down in 98, we had the bear market. And keep moving back. See, top out, and then we had fluctuation downward, drop in the stock market. So that's a way we can use it, and it also kind of confirms that I think that there's going to be an economic slowdown coming toward the second part of the year. So just some interesting things that I discovered tonight. Very interesting, especially that these channels last almost exactly 28 years, and they're about that number of years. So things to think about.